Hello and welcome to the very first Accenture Insurance News Analysis with me, Natalie de Freitas, coming from London, and being joined by Kenneth Saldanha, the Global Lead for Insurance, where we'll be discussing the biggest insurance news stories and what they mean for us and our clients. The first news story I really want to hit on was we're looking at the devastating human and economic impact of the crisis. I mean, the latest forecasts show that the global insurance industry set out to pay about $107 billion on a wide range of policies, particularly when it comes to rescuing businesses. I mean, we saw last week Lloyd's of London reported it expects to pay out about 4.3 billion in COVID-related claims. I mean, these are quite extraordinary volumes. How are insurers dealing with them, and is it forcing them to address their costs?
It absolutely is, Natalie. And I think if you look at what the insurers are faced with, they've really got both a financial as well as an operational issue to resolve here, right? I think financially, clearly, there's going to be enormous debate around exactly what are insurers liable for. The construct behind business interruption is not really what we're seeing in COVID. Business interruption technically is a property coverage that gets invoked when something might happen to your premises that causes you to suspend business for a short period of time. It is not built. It was never designed, priced, or reserved to actually treat an enormous shutdown for 2 and 3 months of every single business out there. So as you might imagine, it is fundamentally a completely different dynamic financially for insurers to deal with. Right? Operationally, right, regardless of where the legal debate goes on coverage, we absolutely see insurance companies and, in fact, even some of the claims administration companies that provide services to insurers gearing up for what might be an enormous spike in claims. Right? If you think about expecting frequency, so in a typical situation, an insurance company expects anywhere between 8 to 12% of their customers to have a claim. In our current situation, if in fact the business interruption claims go through, if in fact the decision is that the health impacts of COVID are going to get covered by things like workers' compensation, all of a sudden, instead of having 8 to 12% of your customer base have a claim, we're talking about 100% of your customer base having a claim. And that's just something that operationally is going to be a huge demand on carriers. So, I think the jury is still, literally the jury is out on whether in fact these are going to land on insurers and to what extent. But certainly there's an expectation and a preparedness that's occurring to actually to face this down the road.
Of course, I mean, probably no one realised the magnitude of the situation that we found ourselves in today. And of course, the crisis has forced insurers to make really difficult decisions. So not only they've had to change and pivot to what's happening externally, they've made decisions internally. So we read another story where Aon revealed that around 70% of its staff will take a 20% pay cut. On the other hand, you had other insurers like Willis Towers Watson and Marsh & McLennan. They really downplayed the prospect of cuts and even calling Aon's move survival mode stuff. So the message was clear that they want to keep people but protect cash flow. And of course, we know they're managing all sorts of impact of the virus at the moment. While this is a moment in time, will this crisis cause any changes to how insurers will manage their workforce?
I think there's no way anyone in insurance can avoid that, right? I mean, if you look at the economics of the insurance companies, first of all, we're talking about, pick your scenario, we're talking about GDP declines of 20 to 30%. And an insurance company's top line revenue eventually is very tied to the level of economic activity in GDP. So any way you cut it, insurers are looking at a substantial reduction in top line revenues, whether that's a broker like Aon or Willis who gets a commission based on what premium they place or the actual fundamental risk that's being written. There is going to be a decline in top line for insurance companies, and consequently that has to flow through. Now that's exacerbated in insurance because it is a services business, by which I mean 60 to 70% of the cost base of an insurance company is people, right? And so when you actually talk about how will the need to transform cost to match the decline in top line revenue play out, you are inevitably going to have to make some extremely difficult choices on the people front, right? And so I agree. There's a lot of posturing back and forth as to, was that a survival play? Was that just a smart play? Eventually, I think any of our clients are going to face a very difficult conversation around people, because I think there's a recognition that every one of them is going to have to make some changes to what's happening on the cost base.
And I want to pick up on a fascinating story I read in the FT that covered the real step change that Lloyd's of London had to do when COVID-19 struck in a short space of time, pivoting all their workforce to work virtually. And it was particularly poignant given their reputation on face-to-face advice and being one of the last remaining face-to-face traditional markets. It's been reported that many of the brokers and underwriters really kind of feel that, this may be the time that things can or should change forever. I mean, do you think the crisis will cause long-term change when it comes to face-to-face advice?
I think it will. There's no question. I know that, when I was in London with my family a few years ago, and I said, hey, we should go to Lloyd's and take a look at, they actually have a real underwriting desk, the place that people used to stop and actually, get their policies stamped. And shockingly, my family didn't seem that excited about making that part of the trip to London.
It's a great building.
I thought it would be a great trip. Yeah, well, at least they liked having the chance. They at least admitted to the fact that the Lloyd's building, the inside-out building with all the pipes on the outside, was cool, but I couldn't get them to do the whole, let's go see the desk, right? But that's a 300-year history of actually underwriting at the desk, underwriting in person, and it's continued in agents and brokers and how the sales, service, and renewal work is done, right? This is a huge shock to the system. And, organizations like Lloyd's or Aon or Marsh or Willis are at a scale where they can actually make some of the technology and digital shifts it's not easy that, and try to shift their business into remote models. If you think about the thousands of independent agents out there, or even some of these tied agents who are out there, these are small family businesses. They're not about to suddenly go into an e-commerce digital experience unless they get a substantial amount of support and assistance to make that happen, right? So it's a huge change for the industry around intermediaries and agents and how that actually works for them.
Do forgive the bit of a step change, but Kenneth, I want to talk to you about pets and Paris. But I have a story, I promise. So we're hearing more of strategic partnerships happening. So French hotel group Accor, they want to get back to business after COVID-19. One way they're doing that is by partnering with AXA to offer, their customers travel on health protection. We're seeing Covéa team up with online vets to offer free video consultations for sick animals. How are you seeing insurers really branching out into the ecosystem?
So this is, well, first of all, on the topic of pets in Paris, always happy to talk about that. With 2 cats and a dog meandering my house, I have a lot of thoughts around pets. And I lost the fight about the dog. I'm much more of a cat person myself, but I lost the fight on the dog. So now we have all 3. And Paris is always a fun location. It's the first place that my wife and I were able to actually afford an international trip, and that was the first one we took with our 18-month-old son at the time, who's I guess now on the verge of graduating college, which is another scary thought. But anyhow, to come back to your question, what you're describing is very much what we see in this concept of convergence, right? Your example around whether it's a wrapper around coverage for your pet, right? Or it's a wrapper around what you're doing with travel. Insurers are absolutely very much testing how they can actually take a much more customer-centric view, get away from specific product offerings, and move much more towards a solution offering. So, as opposed to solving for a single product called travel insurance, and then it's up to the customer to put together all the different things that have to go with it, there's a notion of saying, well, can the insurance company embed that product along with some partners into a broader solution that can then be offered to the customer, and the customer is far more willing to say, okay, if I can get kind of peace of mind for my vacation, which includes even stuff like can I get cell phone coverage from one place, and can I get that linked to travel insurance, and can I get that linked to my auto insurance on my rental car when I pick it up in a different country. If you think about all the elements that go into delivering peace of mind to a travel experience, that's the real power of that ecosystem partnership idea, right? And at the sort of academic level, we talk about convergence and say, how do you just deliver a broad set of things that actually create a solution for a customer?
Well, that's it for today, Kenneth. Thank you so much for your views on the news.
Absolutely. Thanks very much, Natalie. Take care.
Bye-bye. So from London, I'm Natalie de Freitas, and thank you for watching.